This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Discounts on Iranian crude oil sold to China are at their tightest in around 5 years as lower exports drive up prices amid concerns that Middle East tensions may disrupt supply, trading sources said. The discounts are the narrowest since Chinese independent refiners, known as teapots, stepped in as buyers in late 2019, filling a vacuum left by the country's state refiners wary of sanctions reinstated on Iran by the United States a year earlier. Higher prices or reduction in Iranian oil flows, which make up 10% of China's crude imports, would depress already low production at independent plants and further squeeze their razor-thin margins amid sluggish Chinese fuel demand.
Oil and gas producers began shutting in U.S. Gulf of Mexico output and pulling workers off platforms on Tuesday ahead of a late hurricane season storm threatening offshore fields. The U.S. National Hurricane Center warned of steady to rapid intensification over the next 24 to 36 hours, with Tropical Storm Rafael forecast to become a Category 1 hurricane by early Wednesday. Producers could lose between 3.1 million and 4.9 million barrels of oil and 4.56 billion to 6.39 billion cubic feet of natural gas, researchers predicted. U.S. oil futures rose about 1% on Tuesday to $72.10 per barrel on storm concerns.
Moving on to the top news in the energy sector.
Demand for green power in the United States will grow regardless of who is the country's next president, major players in the wind energy sector Vestas and Ørsted said on Tuesday. Offshore wind developers have seen profits shrink in recent years due to rising raw material costs, high interest rates, inadequate grid connections, supply chain bottlenecks, and Chinese competition, prompting companies like BP and Equinor to scale back their ambitions. In the United States, the nascent offshore wind industry has been roiled by cancelled projects, postponed lease sales and a construction accident at the country's first major offshore wind project.
Investors ramped up oil futures and options trading in October to record levels in a bid to hedge growing uncertainty as war rages on in the Middle East and a bearish 2025 supply and demand outlook looms, triggering big swings in crude prices. Hedging can help producers reduce risk and protect their production from sharp moves in the market by locking in a price for the oil. It can also give traders opportunities to profit in times of volatility. Some 68.44 million barrels of oil in futures and options were traded in October, according to data from the Intercontinental Exchange, surpassing the monthly record hit in March 2020 when Brent futures plummeted roughly $30 per barrel as the COVID-19 pandemic crushed global oil demand. Next, we have the top news in metal markets. Prices of London-listed base metals tumbled on Wednesday as the US dollar surged, while investors monitored a hotly contested U.S. presidential election race. 3-month copper on the London Metal Exchange, LME, was down 1.9% at $9,554 per metric ton by 0535 GMT after hitting a 3-week peak on Tuesday. The most traded December copper contract on the Shanghai Futures Exchange slipped 0.5% to 77,090 yuan, $10,771.72 a ton. LME aluminium dropped 1.5% to $2,619.50 a ton. Nickel dipped 0.7% to $16,005. Zinc lost 2.3% at $3,032.50. Lead decreased 0.6% to $2,015.50 and tin fell 1.2% to $31,950.
Iron ore futures slipped on Wednesday, as investors shifted focus back on soft fundamentals of the key steelmaking ingredient from expectations of more stimulus from top consumer China. The most traded January iron ore contract on China's Dalian Commodity Exchange ended morning trade 0.95% lower at 780 yuan, $109.16, a metric ton. The benchmark December iron ore on the Singapore Exchange shed 2.08% to $103.20 a ton, as of 0359 GMT.
We will now look at the top news in the agricultural sector.
Ukraine's overall grain and oilseed exports by sea and river totaled 5.28 million metric tons in October, well exceeding the 3.13 million tons exported a year earlier, Traders Union UGA said on Tuesday. Ukraine is a major global producer and exporter of grains, vegetable oils and oilseeds. Last month's volume included almost 4.8 million tons exported via the Black Sea and 495,000 tons of cargo shipped on the Danube River. The union said further 515,000 tons of agricultural cargo were exported by rail and 142,000 tons by road.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.